Hey guys, what's going on? G De Niro here. I'm going to start a new series which is called Breaking Down the Trade, where I'm going to break down some of the trade alerts that we see coming from James, and or if there's not a trade alert, any other types of trades that I'm doing along the way to kind of give you an idea in the option world how these things work. So with no further ado, let's jump right in and let's go into the latest trade alert that James from InvestAnswers put out. So he recently, on Thursday, January the 2nd, just last week, said that he finally purchased some Tesla after a while of not doing anything, right? He hadn't done anything for a while. And so the reason was that Tesla was around, sorry, this should say 375 a share, that Tesla had dropped down to approximately $375 a share. So recently it was as high as $488 a share, right? And he said he'd been waiting for a long time now to buy Tesla. He said he entered at $375.10 with layer 5 on the ATR model, one of the InvestAnswers portfolio models. It should be support is what he said, layer 5. So layer 5 was right around $375, and Tesla had pulled back to that level after being as high as 488. So that told James this is a place to go in and do what's called a synthetic long. So what exactly is a synthetic long? Well, he bought the January 2027 380 calls and he sold the January 2027 380 puts. It resulted in a net debit of $30. The break even on the trade is for Tesla to be above $410 by January of 2027. And he believes that Tesla should be at $800 to $1,000 by then, adding an additional 1.5% to his portfolio. So with no further ado, let's dig in and break down exactly what this trade looks like. So he sold the January 17th, 2027 Tesla 380 put. He sold it for approximately $106 a share. I went back and looked at the historical data that day, and when Tesla was down near 375, it wasn't there very long. The put was going for around $106 a share. So $106 a share times, remember with options contracts, it's 100 shares, is $10,600 that he collected by selling the put. Okay, that's the first part of the trade. This used up $38,000 of margin to secure or collateralize the put due to the assignment risk. What does the assignment risk mean? It means when he sold the 380 put, he's agreeing to buy someone else's shares for $380 a share on or before January 17th, 2027, if Tesla is below $380 a share by then. Okay, so if Tesla's below $380 a share, he's paying $380 a share times 100 shares or $38,000. That's why he needs that in his account in some way, shape, or form. It could be cash to collateralize it, but James uses what's called margin. He's margining against all of the equity bag that he already has in his portfolio, okay? That's the first half of the trade. So he could have just done that, collected $10,600 and walked away. But instead, he applied that $10,600 plus came up with an additional $3,000 and bought the January 17th, 2027 Tesla 380 call for around $136 a share. That means he spent $13,600. So he collected $10,600, spent $13,600 for a net debit of $30 a share times 100 shares or $3,000. So he had to come out of pocket $3,000 to enter this trade, with the rest of it being collateralized by margin. Well, let's take a look. If Tesla goes to $1,000 and it does so by January 15th, 2027, that means that this synthetic long would be worth $62,000 minus the $3,000 that he spent up front for a profit of $59,000 over the next 2 years. So let's take a look at how that would happen. So you'll note that the $380 call right here, if we go to $1,000 a share on Tesla, $1,000 a share minus 380 equals $620 a share. That would be the pure intrinsic value of what's left on that call option. $620 a share times 100 shares equals $62,000. That's what he would walk away with. But you have to remember, he spent $3,000 up front going into the trade. So 62,000 minus the 3K that he spent up front is what gives you the profit of $59,000 when it's all said and done. In this particular case, the put would expire worthless. And just for rounding purposes, that would be approximately, you would turn $3,000 into almost $60,000 or a 20x return over the course of the next couple of years. Again, provided that Tesla goes to $1,000 a share. So I hope you guys have found this useful today. Remember, you can follow me over here at my channel, which is gdenarocoaching.com. You can check out any classes that I have there or book time with me there once I have time available again. Here's just a few testimonials of some of the people that have done so over the last couple of years. And again, give this a like if you like this video and you like me doing more of these. Go ahead and drop a comment down in the comments and let me know what you liked, or if I went too fast or too slow in this breakdown. And be sure to stay tuned for future subscribe and be sure to subscribe and stay tuned for future episodes of breaking down the trade. All right, guys, take care. Have a wonderful day.